Now, I'm so pleased that we've assembled just a fantastic panel for our next chat about what to look for in some of the most traded stocks on the IG platform when they report, of course. So we've got three: Droneshield, very hot stock this year; Co, really looking like it's turning its fortunes around; and then a stalwart being BHP. So a very warm welcome to Ecuyer from FNArena and Adam Dawes from Shaw & Partners. Welcome to you both. Nice to have friendly faces in here. But we're going to get down to business.
Yep.
I'm going to start with you on Droneshield because
Sure.
you do have a disclaimer to make.
I do.
When you talk about what we'll be looking for in the result.
We're currently doing a capital raise. Droneshield's in trading halt this morning. We're doing a capital raise. They're looking to raise 120 million at $1.15, which is a decent discount to the last close price. I think 127, 130, somewhere around there. It's going to be interesting. A lot of those funds are used for research and development, hiring new staff. They're going to double their workforce over the next year or so. So there's lots of capex to come, as well as then some 20 million for mergers and acquisitions and some other costs for doing the raise as well. So it's going to be quite interesting to see how that one goes.
Because this is a company, we don't need to get into totally the fundamentals. You'll have to do your own research just in the interest of time.
Yeah.
But it's obviously had a big boon from geopolitics. They've been winning a lot of contracts. It feels like they're out with announcements all the time. So does that make it easier to read the report when it comes through, or where do you need to be looking?
I think overall, this cap raise, everyone's going to be looking. We last did a capital raise a month ago for Droneshield at 80 cents.
Okay.
And then it went to $2.70 and now it has come back. I think everyone's going to be this raise looking for that same kind of bounce. I just don't think it's going to happen. I think it's going to be, obviously you don't get two bites at the cherry. I think you've got to be a little bit careful. But where you'd certainly be looking at is those forward orders and that inventory being moved. And I think that inventory is really, really important. If they don't move some of that inventory, because they might have no forward orders or whatnot, and you were saying at the end of this year when the US government writes the checks, that's going to be a pivotal time for Droneshield.
So the defence contractors typically award the contracts in the fourth quarter of a calendar year. So management were highlighting in a recent conference call that that's when they're looking for hopefully a lot of orders to come through. But I think it's really interesting what you're saying about the inventory levels, Adam, and the spend, because they've already expanded the amount of engineers on board to about 114. And they're putting all this money in. So it's not too dissimilar to what you're seeing in the AI space, this huge spend that's going on to build up the business, hoping that the growth runway of the orders will come through afterwards, which really then comes down to, doesn't it, valuations.
Yeah.
How much the market is looking for in terms of growth versus the spend that's going on. Because ultimately businesses like this, they are reliant on contracts. They're trying to build up their SaaS revenue, but that will take time. And they're also hoping that they're going to get growth out of Asia because there's a deep concern around China. So it's a bit chicken and egg at the moment, isn't it?
Well, I think also for that you look at Droneshield when it was at $2.70, it nearly had a $2 billion market cap.
Yeah.
Got a bit.
Look, I'll say it, a bit unjustified.
Thank you. At least somebody can say it. Because it was ridiculous. And so now it coming back to $1.5 billion or so, or even less, it's still very well priced to perfection. Shaw & Partners got a price target of $1.40 on it. This raise is being done at $1.15, so potentially there is some kind of upside, but it all remains to be seen.
Okay, so we'll be watching out for costs. We'll be watching out for any update on inventories and
orders. I think the market's really going to be focusing on that. It's all very well saying, they're likely to come in the last quarter, but again, it's going to be sensitive.
Detail's what we want. Okay, Let's go with Co, because Co's June quarter result looks to have pleased the market. This is not a company that you can expect to see dividends from, but it did look to, again, raise capital so that it could pay down debt. So what more can we get from a company that just reported its quarterly?
Yeah, it's a very interesting story because obviously they were in a world of pain, huge losses, very expensive debt. So they've had to recapitalise themselves, which is great. They've got a new CEO, ex-Barclays. She seems to be doing all the right things. The US business growing really well, but what I thought was interesting in the US is the fact that they're not growing the rate of new customers, they're actually getting more out of their existing customers. So when it comes to Zip, it's done incredibly well post that placement at about $1.52. I think the market's going to be looking for some solid growth out of the US, above and beyond just exercising more out of their existing customer base, because the whole story is around that great big TAM out there, but it is a competitive market.
Very
You've
much
got
so.
Klarna, you've got a firm over there. So in my mind, this is a story where there still are some risks. Yes, they're cash flow positive, excellent. The balance sheet's much better condition. ANZ, Australia, New Zealand, a little bit mature. The concerns I think investors should look for is what's happening with the bad and doubtful debts, or what's going on with the consumer. Plus, there is the regulator over in the US starting to look at buy now, pay later and applying credit card regulations. Now, they have responded, Zip has responded to the queries, but just bear in mind there's a little bit of regulatory risk, and like all companies, they've got to put the growth on the board to justify, I think, further momentum in the share price.
Some of the catalysts that I think we're seeing for Zip at the moment is that them obviously from peaks many years ago coming out of the ASX 100, 200 and 300.
And then coming back.
Now the catalysts are for them coming back into that. And what we've seen over the last year to even 2 years is we've seen this issue where you've got this passive buying, index buying, ETFs, all these fund managers have to buy these stocks if they come into the ASX 200 and whatnot. And so you're just seeing this.
And it's a pure play too,
Yeah,
isn't it?
yeah.
That's slightly aside, but
so
it is a pure play.
you're seeing this massive catalyst of these tailwinds that are pushing these stocks. Yes, profitability, yes, all of those kinds of things, but they're moving into these indexes, and this passive buying has to buy it, and it's just continuing to push it higher.
All right, so Zipco's one that's very live when it comes to its results that comes through. Now, BHP, we did hear from Rio Tinto today. So a lot of the story, of course, it's their growth, whether it be copper, whether it be new growth projects, but it's also still very much a dividend story that we want to know as investors this reporting season, correct?
I think, yes, 100%. However, I think investors might be a little bit underwhelmed by the dividend, not just this half and not just next year, in the years coming as well. So if you're buying this stock for a dividend, that's not the reason for it. In fact, you don't buy any resource stock for a dividend. But this one, because it's part of the cycle, I did like the announcement yesterday or the day before, BHP going in. I think copper is the right space, and they know that by buying Oz Minerals, trying for
Anglo-American.
Thank you, and
this is Philo, maybe in Canada.
Yeah, that's right.
It's joint venture, I think.
So yeah, it's a joint venture. So I think that's the right move for BHP, looking for those copper assets. Certainly iron ore is a bulk of that, and we're seeing iron ore dipping around $98 yesterday and to $100, just sitting there quite nicely. So a little bit cautious. BHP is a fantastic trading stock for 42 to 50, 47, 48. It's just sort of been in a range bound now for many years, and you can see that on the chart there. It sits there. So I topped up a couple of clients down here at 41, 42. Look to trade that out, but it is going to be a tough one.
Okay.
It's interesting because I was just reading some research this morning, and Morgan Stanley is actually looking for an improvement in the iron ore price in the second half of this year, and that's largely due to supply constraints coming out of Brazil and Australia, as well as out of South Africa and also India. So you're absolutely right on the dividend front. It was quite interesting because Rio's dividend disappointed, but the share price kind of took it in its stride. One might argue at these levels, as Adam said, by doing a little bit of nibbling here, you might actually see it's a case in point, like everything's kind of discounted. And if there is upside in the iron ore price, because that still is 50% of their earnings, you might see the stock trade upwards. So out of all of them, that would be like one that I would think is looking the most interesting.
Interesting. And you want that outlook statement, you want their commentary on China, you want their commentary on where they are seeing the demand coming from for these new commodities. Look, guys, that was perfect. Thank you so much for joining us. Really appreciate Dani Ecuyer joining us from FNArena and Adam Dawes from Shaw Partners.